My guest today, Allison Netzer, has written a book called Think Like a Brand, Not a Bank, and it's about adopting a brand mindset internally and externally to create real business value. Allison is also the CMO of Nymbus, a fintech specializing in niche banking solutions. If you don't know exactly what all those terms mean, don't worry, Allison defines them right from the get go. This episode is really for anyone in any industry asking questions like, why doesn't my brand have more impact? Why aren't we living our brand? How can we live it better? How can it create more value? So enjoy. Hi, Allison. How are you? Good to see you.
Good to see you too. Nice to talk to you again.
Well, let me start out by asking for a definition of fintech. Like, I get it's
Okay,
finance and technology mashed together into a word, but
sure.
what's the relevance of fintech in today's economy? Put us into current context.
Got it. Well, the definition is certainly debatable, so I'm not going to throw down the de facto. But I'd say broadly, it's new technology that tries to improve and in some cases automate um, the delivery and use of financial services, the things you and I use on a day-to-day basis. What makes it a little confusing, I think, is that banks and credit unions can also use and create fintech. So it's not a doesn't have to be a standalone approach or an adversarial relationship. For us as consumers and business owners, the benefit of fintech is that they're able to isolate a piece of the puzzle that's problematic, like the mortgage process, for example, and really focus on that, apply some technology that's really cutting edge, and then hopefully return it back to the masses so that we all have a better mortgage process.
And so it can be everything from efficiency to cost savings to all of that. It doesn't just mean one thing.
Absolutely. Right.
And so I know you specialize in niche banking, but
Mhm.
for my bank, my bank that holds my checking account anyway, Bank of America, how
Mhm.
would Bank of America think about fintech? Is it a threat? Is it an opportunity? Is it something they build themselves? Is it all of those things?
Sure. Well, it is. It's both, and it really depends on the mindset of the bank, whether they see it as a threat or an opportunity. I would say your institution, B of A, really does see it as both. Fintech startups can disrupt banks in many ways, expanding financial inclusion, using technology to cut down on operational costs, like you mentioned. But a more inclusive and efficient industry is also an opportunity for banks, and an opportunity to not only partner but adopt new best practices internally. So if you're a primary financial institution, your main bank, if you don't feel like it's sending you emails talking about they're partnering with some strange one name company, they're probably not partnering with fintech. And it's something that does benefit you as a consumer and a small business owner.
So you've written a book. It's coming
Yes.
out, I think, next month. It's called Think Like a Brand, Not a Bank. Thanks for the advance copy, by the way.
Oh, you're welcome.
and and so this is a book about marketing in many ways, even though even though fintech I think of as a technology term.
Mm,
Why
mhm.
why was it important to write a book about marketing in the context of fintech?
That's a great question. I think it starts with brand is actually not a marketing exercise, and we spend some time talking about that in the book. As a fintech selling into banks and credit unions, it's important for the folks on the receiving end, the banks and the credit unions, to have a more modern mindset when it comes to their customer and member experience, really just when it comes to thinking about how they're going to move their institution forward. So, the importance to me as someone who works in fintech is it really helps us get to a meeting of the mind. So it's not that that us versus them that we kind of mentioned before, right? Is it a threat? No, it really should be a collaboration. This book should help that collaboration. And I think the other piece that's beneficial in reverse, right, is there's a lot of fear from banks and credit unions about emerging technologies. And the fear comes from really having a different language and again, a different way of thinking about the world. So, one of the best things about thinking like a brand is it's about talking to each other as people, like what we're doing. And you can find common ground a lot easier with a brand mindset than trying to come together and collaborate if you just have a technology or a profit mindset. So it's trying to get that collaboration to happen.
I see. And I like the term you used about a kind of a modern mindset and brand mindset. And I want to talk more about the banking industry. But before I do, the book isn't just for folks that are into finance and banking, although I think it'll benefit those folks the most. You start off talking about this interesting study done by Kantar, and Kantar tries to take all of these brands, whether it's Coca-Cola or Accenture or Amazon, and put a dollar figure on those. And so I think if I'm right, Amazon's is worth 600 million. I don't think it's billion. I think it's 600 million. What does that mean exactly? How do they put a dollar figure on that?
Yeah, no, yes, I get that question a lot. So Kantar's brand Z measurement is the methodology we use in the book. So it's interesting. It accounts for the intangible perceptions that consumers have for a brand over and above the tangible assets of the company's balance sheet. So clearly, Amazon has more than 600 billion in tangible assets. And the whole point of that is rather than trying to put the business case of a brand of, oh well, it's just a halo effect, right? It's just a nice to have. It's when you include brand equity in financial valuations using something like Kantar, you can actually see the future contribution that investment in the brand is making. So you can actually get the very elusive return on investment when it comes to branding. And so the point we like to make in the book about that is the consistency of investment in brand over time with and hopefully we'll talk about some of the brands that do this super well, but it's not a campaign, it's not a one time launch of a logo or color. It's like any asset, consistent investment over time brings returns. And so we're trying to again give it give brand first thinking that common language that a business person, whether they're in a bank or some other business, will understand, right? And so consistent investment for returns.
Okay. And so that dollar amount is going to come back to me by my investment in the brand. It's going to come back to me in terms of future revenue or profit or whatever. And you use the example of Ritz-Carlton in your book. You use a
Hmm.
lot of different brand examples. Ritz-Carlton's one of them, and it's about knowing that you're going to get a certain level of service. I live
Right.
in Seattle,
Mm,
and I think about Nordstrom in a
right.
similar way, that even though Nordstrom might not be the most inexpensive way I can buy product X, I know that I'm going to have a certain experience when I'm there. If I have to return it, I'm going to have some certain experience that is positive for me,
Hmm.
that makes me more likely to return, maybe makes me more likely to spend more or shop for fewer alternatives. Is there is there another example, another brand example you can think of that really does it maybe outside of retail?
Oh, good question. And Nordstrom's is a very good one for Seattle. I think an interesting one. I don't know if you consider Carvana outside of retail, because a lot of times when you talk about brand, people immediately go to luxury brands, right? It's like, well, and that's feedback we hear a lot. Like, I'd love to have an amazing brand like Nordstrom's or Ritz-Carlton, but I only have this much budget. Carvana is a very good example of really kind of brand first thinking, very consistent brand promise, consistent investment in their brand. over time, even as macroeconomics changes. Another one that may surprise you is actually AARP. If it's not one that you kind of follow, even if you're not a member or going to be a member soon, they're well, we'll all be one day, right? And that's why it's such a interesting brand to watch. But they've made some changes recently under their new CEO that are pretty fascinating in terms of creating standalone brand value that really contributes to the assets that they have, their publications, all of their programs. So those are two that that I look at. But the common thread between all of those is having everyone involved in the brand, right? Because brand is more than a marketing exercise. You have to have them all bought in and having that mindset. Um, and that experience you talked about with Nordstrom's and maybe the person that you're dealing with on the shop floor, we forget, but the key here is it's memorable for both parties, for you, but also for the associate. That's the important thing, the both part. So they invest in brand first thinking internally and externally. Their employees are happy, happy, happy to work there, and they're rewarded for representing the brand well. And then you also get the benefit of that experience. So it has to cut both ways, as opposed to kind of a one-way equation.
Yeah, I really like that example. And also, another one that came to mind as you were talking about it that isn't a luxury brand. And and I know more about this from maybe 20 years ago is Southwest Airlines, where when you called the number, you were going to have a very pleasant experience when phone numbers was the primary channel, and the onboard experience was really friendly and fun, despite being no frills, if you will. And it seemed to have some of those same attitudes. I don't know if this is true anymore, but there used to be, there weren't any union disputes, et cetera, et cetera. So it seemed to work. And the examples that we've given so far, where someone is going into a location and shopping for something or getting on board an airline, seems a little bit more natural to come to me than a bank or financial institution. So why do you feel like a brand is important besides making me think my money's safe when I when I deposit it? Can you put a dollar amount on that?
Good question. You absolutely can put a dollar amount on it, and a big part of what we try to do in the book is making that business case for brand first thinking. You know, you can put a dollar amount to it like Kantar does. You can also look beyond the vanity metrics to judge the return. But I think brand is particularly important for banks and a lot of other industries that are being disrupted, like healthcare and transportation. But for banks, because money movement is part of our lives, right? And so following a more consumer brand playbook, a more lifestyle approach will pay off, right? Because it's no longer, hey, John, I need to make a trip to the bank. It's, hey, John, I need to move some money around. I need to pay you, for the pizza, and then I need to do this and I need to do that. So banking really now is more money movement and it's embedded into our lifestyle. So think about the other brands we have that involve the movement of things and are embedded in our lifestyle, social media, the photos we share with family, trips that we take. So having a brand that can fit into your lifestyle and represent that lifestyle is again where that collaboration comes from, and that creates shared value, which is not something that typically you would say about a brick and mortar bank, right? That you're able to meet more than halfway and you're able to really collaborate. But having a brand first mindset and putting the brand in the lifestyle of your end customer is something that banks can do.
Well, I want to get into the question about an end customer because, I can imagine meetings that I've been in, or well, we want this age bracket skews more male or skews more female, and so on. You give this really funny example, in the book about demographic targeting with Prince Charles, and maybe I'll let you take it from there.
Sure. So yeah, there was a GIF going around the web that has Ozzy Osbourne and Prince Charles, and making the point that if you market by demographics, you would be marketing to those two guys identically. I mean, they're identical when it comes to those sort of blunt instruments of demographics, but clearly, clearly different people. And a friend of mine, Billy Howard, who is the founder of Brand Throw, and it's a neuromarketing agency, which is pretty cool. It's combining EQ and CX, or customer experience. She really is the one that turned me on to some of the risks that we all take when approaching folks solely based on demographics. And because we're talking to bankers, right, talking about risk is a huge component of making any business case. So I wanted to ensure that that came through in the book. That there's, like I said, there's blunt instruments of just male, female, age. That's not brand first thinking. I'm not sure what I would label it, but I would tell you it's definitely not brand first thinking.
Yeah, and then the similarities between Ozzy and the Prince go pretty deep. Not just born in England of a
Oh
certain age,
yeah.
but same number of kids, same the age of kids,
hmm
all
Even how they
kinds of things.
describe themselves as businessmen and entrepreneurs. I mean, you're absolutely right. It's
Mhm.
Google it if you haven't seen it. It'll make you think twice before doing it again. I can tell you that much.
We'll try to put it in the
Yeah,
show notes too.
cool.
Um, so I want to get into the if I'm getting into the customer first or brand first, people first mentality. How should a bank do that? How should they have this in mind when developing their brand?
Mm. I think this is going to sound overly simplistic, but it starts with not thinking about people as bank customer or not a bank customer, right? They're a person, and in many cases, a business owner. And like I said, it sounds simple, but it's a different mindset, and it cuts through more than brand development. It actually influences how you use data, like what we just talked about, how you open branches and stores or not, how you develop your strategic plan, right? That lens of how you actually see the customer. And it's more than, amping up modern lifestyle photography on your website. It's a very broad system-wide change. It's not about are they your customer or are they not your customer as the starting point of defining them, right? It actually goes this way, right? Bringing them to you as opposed to you to them. So it's about, really again meeting more than halfway, to reach them, not just identify them, but reach and connect with them. That's when you have brand reach as opposed to customer acquisition. That's very, very different. You can acquire customers buying a list, doing these types of things. That's not what we're talking about in the book. We're talking about developing a brand that brings people over this way.
So are they like lifestyle moments? Are they scenarios like I'm trying to think about myself? I have a son who's going to be looking to get his driver's permit in 6 months. That's a big thing. Or maybe I'm budgeting really tightly because I want to do something extra with my house or something like that. Is that the type of thing that I'm supposed to latch onto as a starting point?
Potentially. So the starting point is, so let's take you as our case study, is zoom out a little bit more, right? You're a person that right now has some complexity, right? Some competing priorities in your life. You've got your son moving into another life stage. You're considering making some changes to assets that you have. You've got a lot of churn and change going on, right, in your life. So as a brand, how can I make your money movement decisions or any decisions? How can I make that decision smaller for you? And that's kind of how we get into the whole niche banking strategy. Is it's about making that decision smaller. So you know, your son who's saving up for a car and looking to go, into that and maybe build his financial literacy. There's a great brand, which is not one of ours, called Live, Liv, and it's specifically geared at that particular group of folks that are moving into financial responsibility without maybe the financial literacy, and then gives you as the parent the transparency back so that you can better budget for the things that are going on in your life. So you want to actually look for complexity as opposed to a life event, and then you want to try to make that decision smaller, whether it's through product, services, or a combination of the two.
I see. I like that model.
Mm.
You use the term, same term I used in the intro, but I didn't ask you to define it. What is niche banking?
Sure.
If you could define that for the
For the
audience,
audience, for
and
the
then
people in the back, right?
also yeah, for the vast
Yeah,
audience, also like uh, beyond that, what role does niche banking play in the banking ecosystem, and what are the unique challenges for niche bankers or niche banking institutions, I
sure,
should say?
sure. So niche banking is really it's focusing on a narrow market in a deep way. This is how I would describe it. It's the overall strategy for Nymbus where I work, but it's an emerging strategy for lots of our colleagues in the space. And it's different than a bank trying to be everything to everyone. You mentioned your where you bank today, right? Huge bank, and it's got every possible service for every possible person. But unfortunately, they're truly serving very few. So niche banking, and I love the approach because again, it makes that decision smaller for everyone. The bank, right? Because it's a narrow focus, and the customer because it's a purpose built solution. It's not every bank service that you'll ever need. We talked about Live. We have a solution, we have a banking solution for 18-wheeler drivers who have a very unique financial challenge that they have to face in terms of how they get paid. A bank for newlyweds, right, which is sort of that moment in time we talked about earlier. That's a very easy decision for both parties to make to collaborate on together, as opposed to making a decision of what bank should I use for every single product that I could, possibly have. So the challenge for folks that are adopting this strategy, whether it's a, vendor like where I work or banks that are doing it, is on its surface, it's really hard to sell sometimes internally because you're like, well, we're struggling to make money when we're appealing to the entire United States. How are we going to make money if we just focus on 18-wheeler drivers? It doesn't compute right from the beginning. And that's where again that making the brand first business case and really looking at that addressable market going deep as opposed to broad works, but it's a conversation. No one woke up at the beginning of this year saying, yeah, bank for newlyweds. That's what we should do. So it's new thinking, and it's going to take a while, but we definitely have are seeing a lot of momentum in the industry for going this way.
So I'm sure a lot of marketers listening can empathize with this because let's say you've made the business case and you've pitched it to the ELT. The ELT loves it. They want to go brand first. And then they're like, "Hey, CMO, okay, like what's next? What internal changes? Because you said it's not just how you speak to folks in your marketing. It's also what you do with your associates and how you work with your associates. So what is the kind of the internal change playbook for a bank or credit union or any institution to make in order to successfully impact external changes like this?
Well, you need to buy the book. No, you read the book. I would say, it starts with mindset, right? Mindset matters. And I'm going to parse your words a little bit because what you said happens a lot and shouldn't. the ELT or some group meets, and then they go over to the CMO and say, how we're going to do this. CMO, and this is usually the board, right? And CMO doesn't usually get to go to the board meeting. So CMO needs to be at the table when these things are being discussed, not just because of representation and just because you should do it, but because, again, how you feel about something internally manifests externally. So when the board is getting together and they're excited and they want to do these things, that spirit and that energy needs to be experienced firsthand by by the CMO or whoever is going to take it forward to you. And then to go do the work, right? Once you're kind of past the philosophy, it starts with the team that you sort of knight or designate getting the change going. Does it reflect the audience? Does it have real power? So the playbook can change, but what in our research and just experience can't change is they have to have communication channels inside and outside of the institution or the company. They have to have real decision making power, right? It's not posters. This isn't like a kind of a culture initiative. This is a business imperative. And so it has to have that vibe, or it just gets candidly just gets written off as like a marketing project. So that's really the crux of getting whatever playbook it is pushed through and made part of it. And then kind of going back to us talking about Nordstrom's and Ritz Carlton, getting the employees involved, which means not just incentivizing them or doing the one way, getting them excited. It's bringing them in and getting their voice, making them part of the solution before it goes out to the rest of the company, is absolutely critical.
Yeah, I like that, and I think the point that is landing on me is the business case is much more than touchy feely. We're all going to be
Yeah,
happy. Our customers are going to be happy, and part of that's going to happen for
right, for
sure.
sure.
But that there's it's going to improve the prospects of the
Right,
business. It helps the board. It helps the shareholders. It helps the associates. It helps the customers,
right. And
and that's what's really key.
mhm. And that's on marketers where we, and myself included, need to do a better job is brand is not soft and fluffy. And we mentioned that in the book. And so every interaction that we have, whether it's about a brand first mindset or not, is we have to do a better job of ensuring that we're speaking the language of returns, that we're speaking the language and appealing to our internal audiences as well as we do our external audiences. When you're talking to a CFO, that's very different than talking to your head of HR. That doesn't mean you give different answers, but you do as much work trying to understand them as a consumer of your initiative or your idea as you would someone trying to buy whatever it is that you're selling. And using that language, talking their language is critical as opposed to doing the marketing speak and only showing pictures. That doesn't help the case to change people's minds that brand isn't soft and fluffy.
Hmm. So, Allison, what was your process, or what is your process? Was your process for Nymbus in coming up with your company's own brand? Like, where did you start, and what was your playbook for folks that want to take advantage of this,
Mhm.
and they're in the situation you were when you took the role?
Sure. So I've been there about 2 years, and when I joined, the brand wasn't, there wasn't an energy to it, right? So my first reaction was like a lot of marketers, like we need to rebrand, we need to do all these things, and then I was sort of listening to myself, and I was like, wait a minute, I'm doing what I tell people not to do, right? Which is I'm focusing first on like the color and the logo and things like that. So I backed way up to who is our audience and what, again, how can we create shared value with them. And I know that sounds a little woo woo, but when I backed up and said that, what really came through to me was they're not looking for another sexy fintech brand. There's plenty of them out there. What they are looking for is someone that can help make these really complex decisions smaller. So we built the entire new brand promise around that simplicity. So we didn't change our logo. We don't have a tagline. We kept everything simple. We went from a 192-page website. We have a single page website, and we still do today. It's just one page, even though we're a rather sizable company. So everything we did from a brand perspective was around solving that simplicity issue. And it gave us that sort of guiding principle so that everything that we do today, we've simplified our event strategy, right? We don't, for example, we don't go to industry events. We only hold 2 bespoke events a year, but that also makes it a lot easier on our prospects to find us, to interact with us. So kind of going all over the place, but the point there was I resisted the urge to change the easy things. And I focused all the effort of myself and my team on how we change the really one hard thing. We're consistent around that, and that consistency is what's created the momentum that we've enjoyed.
And doing fewer things really, really well
Hmm.
probably has a multiplier effect to it.
Absolutely. We've experienced that. And by no means are we the ones that invented the, do fewer things well. But, say that out loud and then go back and think about how we defined niche banking, which is what we do as a company.
Mm-hmm.
You have to be what you're proposing, because at the end of the day, in financial services and a lot of industries that are being disrupted, FOMO is real, right? As a vendor, your customers just want to be you. They want what you have, right? They want that momentum. They want that recognition. They want the coolness or whatever it is. So you really have to be what you're wanting to solve. So we have to be simple. We have to be on the edge of things because that's what we're selling. So we have to be that as a brand. So when we get into the sales cycle, a lot of it is they want to experience at a brand level what we've been able to experience.
Yeah, that makes sense. We as a performance marketing company, whenever we do things as a brand or internally with that performance marketing ethos, if you will, we always have a better we always have a better result in every way. That's a really good lesson. Allison, you're a very prolific writer, I've noticed, and you do. I recommend everybody follow it. It's called Friday Frame Up. I think it's hashtagged, and you post it on your personal LinkedIn. It's really good, and it reflects your thoughts of the week. And there's some that's related to your business, but some that's not. How how do you find time to do that? And what's been the process, and how has it been useful and helpful to you? And sort of like a related question, I know I'm asking a lot, is there's a lot of things that come across as mentorship, which are really useful. What mentors inspired you to do that?
Okay. I think I've got them all. So no, thank you. I do enjoy writing the Friday frame up, and it is just me. I know we've kind of talked about that offline. Hopefully the readership is the team, right? But it's a practice I've had for a while now, and so leveraging it as content to help other people, it actually makes dedicating the time a lot easier, right? Because the effort goes farther. And it's something that it frankly it makes me do it right on Fridays when I just kind of don't feel like doing the Friday frame up as far as me as Allison doing the work that I write about. It definitely makes me do it. And as far as mentors, and you and I kind of chatted about this before we started, is, you know, I've had some amazing mentors in my life, and still do. Our CEO at Nymbus is a mentor and has been for several years now. But my dad was actually my first mentor, business and personal mentor, and he said that you don't need a classroom to be a teacher. And as I moved to work for a remote company about 7 years ago, even before the pandemic, that really came to my mind when I was thinking about how do I continue to mentor and be mentored when I don't have a physical place, to go to. And then, we weren't going to travel and all of these things. And so writing like the frame up or the book is sort of that, it's almost that headless mentorship where I feel like, at least I tell myself, that I'm giving some value to bunches of people that, or maybe dozens of people that they can then take into their work life and then hear back from them, right? So again, it's that two-way street. So um, I'm not a super corporate type person, which I think you probably get by this point. So really holding on to the writing and the mentorship that way has helped me feel like I'm being more of a teacher than a C-level executive. I'd much prefer that label.
So, Allison, your book comes out, Think Like a Brand, Not a Bank. When?
August 30th.
August 30th. Okay, so a couple
Yes.
weeks from our record date, and I think probably a few days ahead of our release date here. Thanks so much for being here.
Yeah, well, thank you so much for having me. The questions, and I mentioned before, I am now a fan of your podcast, as is my whole team. So thanks for putting the
Oh,
subject
good.
matter of EQ out there because I think it's important.
Thanks, Allison.
You're welcome.